All right, everyone, welcome back for the episode of Carnivore Trades. Today is Monday, August 15th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, spiders up here, 0.4% here, finishing at 428.87 on the day. NASDAQ up a little bit more, up about 0.8 tenths, finishing at 333.06. So, again, another kind of a float update. Almost looked like the same kind of pattern as Friday. So we had that kind of like gap up, little consolidation, then a move about an hour into the day, and same kind of thing, gap down, little consolidation, then just kind of a float higher. We're still definitely in the summer doldrums. We still have OPEX week this week, so expect a lot of game playing. We do have retail earnings, Walmart, Target, Lowe's, Home Depot, all report tomorrow and through Wednesday, I believe. I would think a lot of those, like Target and the Walmarts, they've been really kind of pushing guidance down. I would think a lot of this is priced in, although you have rallied pretty substantially off the lows. So maybe, even though expectations for their earnings are very low, they have, come off the lows pretty sharply here. I mean, you look at Target, was 138 all the way up to 173 now. Really just about a month and a half ago, pretty sizable move here. Walmart was actually, on that, fell pretty sharply on that that earnings warning, 120, but that's all the way up to 132 now. So, it's anybody's guess what these guys do on earnings. You see Home Depot there coming way off the lows. Lows there, well off those 120 to 170 to almost 210 now. So no idea really what they do. Again, the worst is priced in, but that doesn't mean that price action is necessarily going to reflect that, as they have rallied pretty substantially. So we'll see what we get here. Overall, market's still in a really complacent mood right now. Again, you see the VIX did kind of inch up, up 1.4% with the market green. So again, this is one thing we've got to watch for here. If the VIX continues to kind of base here and doesn't make new lows and starts to inch up throughout this week. And remember, we have VIXpiration on Wednesday too, so we'll be watching to see what happens Thursday, Friday. Each of the days after VIXpiration this year, we've had a 100-point move, so that can definitely, and it's either up or down. So we'll definitely be on watch for that. But overall, market's still kind of floating up here. We're in the summer doldrums, and until the volume returns, I wouldn't rule anything out. I wouldn't rule the market being unable to continue higher here. So that's just really what's going on. I think everybody's looking at this 200 moving average, and I personally think, I was just telling the members, I think we actually get above that before we get any sort of selling pressure here, or before the selling kind of comes back and we get that volume, from the market. We get into that seasonal September type period or late August. But the reason for that is that the 200 moving average is notorious for failing on, like the first test. It's just I prefer the 200 week moving average, the 200 month moving average much more so. There's just too many amateurs that pay attention to this. And a lot of the time, when you have a big rally like this, it's not uncommon to pierce these levels. We talked about this trend line here. We've been watching that. Again, a lot of eyes on that area. We did fill this gap here at 430, 429.06 today. So that gap is now filled. But a lot of the time you get through these levels, and that kind of gets the last kind of FOMO retail investors involved in the market here. So I wouldn't rule out a little bit more higher, a little bit of a move higher here tomorrow, maybe even into Wednesday. That would be kind of the preferred setup. A lot of the time, Wednesday OPEX is notorious for a reversal day. So if we're up into that, that could be kind of a catalyst. And of course, we have VIXpiration, which I just mentioned. So we'll definitely be keeping those on watch. But again, respect this market, respect the light volume for now, because they can take this up a little bit higher. So anyways, let's flip over here. So triple Qs continuing higher. So your next kind of level here is a little bit higher. It's right at this little pivot low there. And again, that was obviously the breakdown from April earlier this year. And then there's that 200 moving average a little bit higher there as well. So we'll keep an eye on those levels. But, again, the Qs are going to follow the spiders here. I'm really just keying off what the spiders are doing at the moment. But again, wouldn't rule out a little bit more upside in the cards, even though we are pretty extended here. Semiconductors, again, had a nice day, so did make a slight higher high. You do have some resistance still here at about 249, 250, but you did pull back a little bit over the last week, so you're making a higher low now. So I wouldn't rule out a little bit more of a push. There is a gap up here and there's some other pivots. So we'll see if it's got a little bit more gas in the tank. Again, with the light volume, I would not rule anything out. IGV, same kind of thing. Looks like it just got above. Let's take a look here. So 317.40. And we closed just below that pivot high from the engulfing reversal. Again, it was an engulfing reversal, but I mean, look, there's no volume behind it, so it's hard to really make much out of it. But nonetheless, you are still coming into a pretty good sell bar there. IGV higher, but into a little bit of a level. XBI, same kind of thing. This is trying to consolidate though, so if this can continue a little bit further, I wouldn't rule out another little bit of a push, but XBI is still kind of getting long in the tooth here, all things considered, but it's holding up just like everything else is right now. And then you see the transports here. DJT, just kind of a little doji candle. We had that kind of, we had a little bit of a topping tail into the 200 on Friday. And then a little, hanging man doji Thursday we had the topping tail. Then Friday kind of the hanging man, and now just a micro doji. I wouldn't make anything out of this. It's just hanging in there. We may just get some chop here in a lot of these names. It is OPEX week, they're going to burn out. A lot of the bears already got burned out, so that's why I don't see a whole lot more upside here this week. All that all that put premium that expires this Friday has already been fried. So now maybe there's a little bit of call premium getting burned out as well. So you could see some both sides here. You might see a little chop, but overall wouldn't make too much out of the transports today. Rates here. So let's talk about this. So 10-year did get hit a little bit, still inside of this green bar from Thursday. But if we want to flip over here and show you the yield curves. So 2s and 10s basically paused. It was green earlier. And then 3-month and 10 actually inched up a little bit. If this inverts and this continues higher, and I've been saying this anyway, but this is going to be problematic for the market. This is why I'm not in the camp that we're just going to blast off back to all-time highs like everybody thinks we are. I know it's hard to believe right now because the market's it's so complacent and doesn't really care right now. But it's because we're in the August time frame. We're not seeing, you take a look at the volume. I harp on this all the time, but this is not indicative of major institutional participation. There's a lot of traders are on vacation, a lot of institutional, a lot of high net worth individuals are on vacation. It's kind of like a thing every year in August. They all go on vacation. So I'm not necessarily convinced of this rally, and a lot of that has to do with these yields. And if the yield curve continues to flatten, kind of the bond market calling out the stock market and saying, hey, what are you doing here? So anyways, yields backed off a little bit today, but the curve did flatten in the 3-month and 10-year. So again, we'll definitely be keeping an eye on that, and definitely keep an eye on the 2-year. That's the most important one right now. It did inch up a little bit today. So 2-year bond up, 10 basis or 9 basis points. So not a big move overall, but you still have kind of like a bearish inside bar here on the daily. And if this starts to head lower, the market's going to start to freak out. So be careful of that. Don't necessarily be lulled into a false sense of security with this rally here. HYG, again, kind of a pause candle. Don't make anything out of it. We had a little reversal Thursday, a little up move here and a pause today. Let's not make too much out of it here. XHB did inch up a little bit, so this is continuing to be in kind of float mode. ITB, same thing as well. ITB does have like Home Depot and I believe Lowe's in it, so this one will move a little bit more on those earnings, so just be aware of that. This does contain some of those retailers. I think it has Sherwin-Williams in it too. I'm not sure if they report anytime soon, but overall, again, just a pause here across the board. It's really hard to make too much out of this stuff, guys. Honestly, I'm not even really this week, I'm not even going to be too active in trading anyway, just because the volume is so light that you don't want to get into these setups thinking that there's something there and there really isn't. But anyways, VNQ kind of peaking above this trend line, maybe it wants to go up there and tag that 200. You've got this little kind of little pivot there, breakdown area, so kind of coinciding with that. So again, with the light volume, wouldn't rule out a little bit more of a move here, but a lot of these things are getting pretty extended. XLF, kind of an impressive reversal here. Again, paltry volume, but you gap down, you basically close back up to the flat line. JP Morgan actually scratched out a gain. Bank of America just flat to negative. Wells Fargo flat to negative. Goldman, nice move there, and Morgan Stanley also green as well. So broker dealers also having a monster move here. This is an amazing move, absolutely defying gravity here for the broker dealers. this is just a truly incredible squeeze here on XBD, and you have to respect that for the time being. Crude here. So it looks like we just barely dipped a new low here. So it looks like it was 87.01. I think the low of the day, let's take a look, was 86.82. So by about 20 cents or so. Made new lows, but again, we're still looking for another little micro leg down, and then I think it'll be time to get into crude. I'll definitely be taking that trade, regardless of what the volume is like in the market. I will definitely be getting into that if we get down to those levels. So crude getting closer, we're getting there. I just think we got another dip. XLE, this was a little bit of a weak sector today. Had a nice rally over the last 6-7 days, and then just kind of a gap down today. It did finish nicely off the lows. You can see it pretty much rallied all day long after the gap down, but you know, this is the type of OPEX stuff you get. Some things are going to be up, some things are going to be down. You're going to have a little bit of chop, but XLE did show some weakness. XOP, obviously the same kind of thing, and OIH gapping all the way down. So we talked about this last week. I talked about it in the weekend video as well, but so this is triggered. So you have an inverse head and shoulders here triggered on OIH, but I would go by a weekly close here. So if you can't get back above this trend line by the end of the week and close above it by Friday's close, or I should say on Friday, you know, Friday afternoon, you have to be above this line. I don't care what it does tomorrow or Wednesday, but if you can't do that, that's a failed pattern. So I would probably expect another leg down in OIH, but just keep that on your radar there. And we'll continue to watch that throughout the rest of the week. But OIH did get hit just like everything else energy-wise, except for nat gas, which has been the king so far. You know, right off that trend line, this trend line has been money for the last, you know, really over a year now, going back to last May. Support, resistance, breakout, support for a minute, and then breakout, support again. Great trend line there, and it looks like it's trying to, you know, it's trying to back and fill a little bit. If this consolidates, I wouldn't rule out another push here in Natty. It's just been really strong, and the fundamentals are really strong right now. Is it overbought? Yeah, but you know, commodities can get overbought, and they can stay overbought for longer than you think. So definitely respect the strength here in nat gas. Dollar index also highly green. So we closed above this kind of breakdown bar today. And you might say, well, why is the spiders still up? And why were yields lower? Kind of like conflicting there a little bit, right? It's OPEX stuff. So that's just, you know, the type of stuff that you see during OPEX week. I wouldn't make too much out of it, but dollar was nicely higher. We got a bid off that 104, you know, 97 area. And remember on the weekly, I talked about this last week, we closed back above this trend line after we pierced it Wednesday, Thursday. And so again, I wouldn't rule out another little pop in the dollar here, so we'll keep an eye on that. But nice little day for the DXY today. Gold got hit a little bit here. You see the GLD gap down and kind of just chopped sideways. But overall, you know, it held the 50 moving average. I would like to see it get off the lows a little bit more. But if this stays upright and kind of stays sideways in this area, I love it for a move up. I just want to see it kind of hold this, at the very least, hold that 20 moving average, and it can put in a higher low. And I like gold here for another leg up. So regardless of what the dollar does, so like, I'm just going off of this chart here. But you know, overall, nothing terrible there on gold. Silver did reverse a little bit weaker of a candle. I don't like how you reversed all of that move from Friday. You did come off the lows though, so again, if it can go sideways a little bit more and kind of firm up, I like silver for a push here as well. No real problems there on the daily time frame. Platinum with a pretty good reversal here though. It did hold that 925 level. We'll see what kind of pattern it does. I do think it needs to do a lot of backing and filling. If it does, it can definitely have another leg up here. And then palladium also kind of dipping lower as well. Basically holding that 200-day moving average for now. And then copper also dipping today, although we kind of expected this, right? We went straight up into that 50 without much of a pullback. We had a little bit of one there, but went right into that. You know, I told you guys 370, that was going to be an area, and it just so happened the 50 moving average coincided with that level. So, you know, nothing surprising there to see it kind of pull back. It did finish off the lows though, so it's holding up again. If this gives you a little bit more of a pattern, this can have another zigzag as well. So we'll definitely keep an eye on that. All right, let's lastly flip over here to Bitcoin. So Bitcoin kind of not participating in the rally, down about 1.1% here. Ether down 2% after tagging that psychological 2000 level. I told you guys for quite a while, I think it was back in like mid to late July, and I was like, yeah, I would give the upside bias to 2,000 if it can consolidate, which it did. We got a bid, we pulled back, we got another bid, and we went up there and finally touched it. So getting a pullback off that psychological level, you got to figure a lot of bulls bought down here at 2,000. They bought on a Pierce of 2,000, and then you see this consolidation here and that breakdown. That's where all those bulls are trapped. So now that turns into resistance. So that's why we're seeing that pullback there in ether. But overall, no real problems. There's no major sell signal at this point, although there could be one at some point in the future. But for right now, it's hanging in there okay, as is Bitcoin, although Bitcoin's much weaker. Overall, I wouldn't make too much out of it. You know, I wouldn't make too much out of today's price action, all things considered. Anyways, spiders here. Again, I wouldn't rule out a pierce of that 200 moving average or this trend line. Again, this trend line is not perfect. You know, I could probably draw it through the high if you wanted to. I actually kind of like the trend line here on the E-mini a little bit better, kind of going right through this high. So I think, plus this one kind of coincides with that 200 moving average a little bit better. So we'll see. I do have a level here of resistance. It's a little bit higher up, but I think it's good. It's a little bit above the 200 moving average as well. We'll see if we can get there this week. Again, I think if we're up big tomorrow and we gap up Wednesday, I think we probably roll over into Thursday, Friday. At least that's generally how things tend to work here, especially if we start hitting those numbers. But again, gotta let that volume come back into the market, and once that happens, I think we'll get a pretty good sell here over the next couple of weeks. Anyways, guys, gonna wrap it up here. Come find me on carnivoretrades.com. You guys take care, and I'll talk to you all tomorrow.